So let's examine the economics of all this, because supply and demand is key to understanding oil's spillover effect for the global economy. Now, OPEC and the big producers, they always want the prices to stay just at that sweet spot, high enough to keep them in business, low enough, though, to keep the demand ticking over. And at the moment, the trade data suggests Iran's customers will be able to bridge any supply gap. The United States has also reassured the market, yes, any gap in global oil production will be well supplied. Saudi Arabia, for its part, says it won't raise oil output immediately. Actually, there's an OPEC deal with Russia in place to cut production, but that could be revised as soon as June when the cartel meets. But there are supply constraints as well, places like Venezuela and Libya, of course, due to internal conflicts. Iran has threatened, as it often does, to block the Strait of Hormuz, the major oil shipping route in the Gulf. The upshot of all this is that Brent crude, the global oil benchmark, is up around 40% since November. So if supply fears do start to re-emerge, that could send oil prices even higher. We're going to talk about this all with Jameel Ahmad joining us from Kuala Lumpur. He is the Global Head of Currency, Strategy and Market Research at FXTM Market. It's great to have you with us, Jameel. So all these countries, the likes of China, South Korea, Japan, Turkey, they are going to have to do without Iranian oil, at least for the foreseeable future. The United States says, don't worry, there's plenty of oil around the place. Do you agree with that?
Well, there certainly is a lot of different oil producers, but what I would do is liken this to a different scenario. Let's say Iran is Tottenham Hotspur, and the football team has now lost its best striker, Harry Kane. The best striker for Iranian economy and for its supply is actually oil. So all of these other countries involved, China, India, the waivers total to 8 different nations. They are now without the oil supply from Iran when these waivers expire at the beginning of May. Now, there is enough oil elsewhere. Places like Russia, United Arab Emirates, Saudi Arabia, they can supply that oil. However, it will take some time. And this is why investors have priced in a higher oil valuation. Oil has touched its highest level of 2019, and it does look like the rally in the oil markets will continue a bit further yet.
And what about the effect on Iran? We already know US sanctions being in place. This is exactly what the slowly recovering Iranian economy won't need.
So if you turn the taps off on the oil market, the Iranian economy will suffer. Since those sanctions, economic sanctions put back in place in May 2018, we've seen the Iranian rial crumble like a biscuit. Inflation has rocketed sky high. There's already pressures on the Iranian economy that is going to see a recession of at least 4%, according to the IMF, in 2019. Now that it has been confirmed that these sanctions on Iranian's best export, oil, will be turned off as of next month, we expect this recession to extend even further. Looking at recession beyond 4%, the Iranian rial will remain under pressure, and it will also increase those Iranian inflationary pressures, which is very bad news indeed for the local consumers on the streets.
Right, so the Iranians will, rightly you would say, feel aggrieved about the situation that they find themselves in. Who is or who might stand up for them, allies-wise, people who are willing to take on the United States in some way, shape or form and say, no, we will continue to do our business?
Well, the nation that is known to import the most oil from Iran is China. So you would look at the side of China towards whether it could potentially stand up for Iran in this situation. But I don't see this happening for this reason. US and China trade tensions and those trade negotiations that have been going on in the background now for most of a year. Now, the United States and China are very close to a new trade agreement. If you check the narrative from both sides of the Chinese authorities and the United States authorities, investors have become optimistic that a trade agreement is close, which is extremely good news for the global economy. If there was a standing up for Iran in this example, hypothetically, this would put that progress on the back burner. So for this reason, I do not think there will be somebody that stands up. It's probably going to be accepted, in my opinion, that those producers or those importers of oil will look for oil elsewhere.
Let me throw another country into the mix, and that is Turkey, not so much in the sense of we've been talking about standing up for Iran, but the effect on Turkey as well, an economy that has struggled itself. Its currency has been struggling in the last, year or so, really. What about the effect on Turkey?
This is extremely bad news for the Turkish economy, for its markets, and for its currency. It means that Turkey will now need to look for another supplier of oil at a time where its financial conditions are not great. Probably, in my opinion, we will see weakness in the Turkish lira, but there's other currencies and economies out there that will benefit from this news. I will mention Russia and the Russian ruble. Russia is one of the biggest producers of oil. It can actually supply this gap, and the Russian ruble will strengthen on higher oil prices.
You started with a football analogy, something which a lot of people can understand. I again want to bring this all back to something people will understand, because we've talked a lot about separate economies, but people all over the world, when they think about higher oil prices, they think about higher fuel prices, they think about taxes on aviation industry, all these sorts of things. Are these things which people need to keep an eye on, or have we sort of gotten used to things being just that bit higher?
Well, when it comes to inconsistency, the verbal narrative and the social media narrative in particular that comes from President Trump. He wants lower oil prices. However, this news actually strengthens oil prices because of the tighter oil markets, because the Iranian oil supply has been cut. Now, everybody knows and is aware of the need for oil prices to move lower. The global economy is struggling and it's facing headwinds in 2019. There is a multitude of different external challenges. So the longer-term picture is actually that oil prices should come back under selling momentum, but not until it is known and confirmed where this cut in supply from Iranian oil being turned off will be filled. So this is why over the longer-term picture, many still remain negative on oil prices, which is why our everyday viewers, our everyday consumers do not have to worry too much. But over the near term, some geopolitical risk has been priced back into oil. This is why oil prices are rallying. They've hit the highest level of 2019, but it's still a dramatic distance away from where oil prices were a couple of years ago. So no need to worry, no need to panic. But we do need to monitor the day-to-day news narrative around oil prices, and specifically what happens next.
It's always what happens next, isn't it? Jameel Ahmad joining us from Kuala Lumpur. Thank you so much for your time. And still